Hey everyone, Rick Albert here. 3 things you need to know as an investor this week. One, in the news, housing affordability, still a thing. So even despite home prices going up, interest rates are still, staying level in the mid to high sixes. But we are finally starting to see a slowdown in appreciation. This is a great thing, by the way, for both buyers and sellers, right? We want a more balanced market. What is not really being discussed is how much concessions people are giving. So, for example, a home might be asking $1 million, but they might end up giving 20 grand to the buyer to lower their interest rate. So on paper, public records, $1 million sale. So even though homes are appreciating, we don't know how much sellers are actually netting. That will be an interesting tale. Second, a law you need to be aware of. The way the law is structured, that was effective January 1st, is it's first come, first serve for tenants. So if you post a rental online, you have to review the applications in the order of which they're received. So if the first applicant completes a full application and they meet all your criteria, you have to accept them. It's not a choice. And then the other ones are basically saying, hey, sorry, you're too late. With that said, if the other ones did pay for an application, you have to reimburse them. So think about the strategy and the timing of everything. The third thing, general tip, it's so common. I hear people say, well, I have a low interest rate, I'm never gonna sell. But from a cash flow perspective, from a risk profile perspective, from a cash on cash return perspective, the interest rate doesn't matter. I will gladly buy a property that has a 7% interest rate if it means I'm going to cash flow better than my current property that has a 3% interest rate. So don't get blinded by the interest rate. Look at cash flow, cash on cash return, and risk profile. Love to get your thoughts. Comment below, and I'll talk to you guys soon.